Hi, everyone. How are you? Hope you are well. So, today we're going to talk about taxes. As you know, taxes are due, it's right around the corner. Have you done your taxes? So, we're going to talk about tax advantages that you can take. Keep in mind, this is not financial advice. I'm not a financial advisor. So, seek your CPA out and your attorney. But I'm just going to come up with some ideas for tax advantages. So, first of all, we're going to talk about opportunity zones. So, what is an opportunity zone? So, an opportunity zone is an area that the government has deemed as an area that needs development. And so, if you decide to invest in that specific area called an opportunity zone, the government is going to give you special tax advantages. So, the thing with opportunity zones, you invest in this particular area that the government has deemed, and you do one or two things in there. You could choose to do new construction in that area to get big tax advantages, or you could choose to do big major rehab in that area. So, one of the two, it would be new construction in that area or big dramatic rehab in that area. And so, what the government is going to do, they're going to give you very huge tax advantages for investing in what is called opportunity zones. The thing is that you have to keep the investment for a period of 10 years. And if you sell it before the year 2047, then you don't have to pay capital gains tax. So you keep the investment for a total of 10 years, sell it before the year 2047, and then you don't have to pay capital gains taxes. So, what is capital gains tax to begin with? So, for a regular investor, say for example, you bought a house for $100,000 and then appreciated to 200,000. So, and then you sell it. So, so 200,000 minus the 100,000 is your $100,000 profit. So, in a regular scenario, you're going to have to pay capital gains on this profit. It's 100,000, it appreciated to 200,000, you sell it. 200,000 minus 100,000 is 100,000. So you have to pay capital gains on this $100,000 profit. And so it depends, the capital gains, it's usually around 15%, but it could be 20%. And that depends on if you're single, if you're married, and how much you make. So, say for example, I'm going to take a single person and you make anywhere between 50,000 to 100,000. So, if you're in that category, your capital gains tax would be 15%. So, you would have to pay 15% of this $100,000 in taxes. So, what investing in an opportunity zone does is instead of paying this taxes that you would normally pay, you keep it for yourself. That's more money for yourself to keep. And so that is one loophole to taxes, that the money will go into your pocket instead of paying the taxes, is by investing in what is called opportunity zones. Again, you have to keep the investment for 10 years and sell it before the year 2047. Again, remember to seek out your CPA on this for all the legalities, your CPA and your attorney. So, this is the advantages that people are investing in opportunity zones are getting. This is one of the reasons why people choose to invest in opportunity zones is more money is going into your pocket instead of paying it out to taxes. So that is number one, opportunity zones. Number two advantage, short-term rentals, the short-term rental space. And so there are some advantages, tax advantages associated with the short-term rental space. And that would be, say, for example, you own short-term rentals, but you also are a W-2 employee. So say, for example, you make $100,000 a year in your job, and say in the short-term rental space, you have a 50K loss. So what would happen is this 50K loss, you would report it on your taxes. And so instead of paying taxes on this $100,000 that you earn at the job, they take into account this 50K loss. Instead of paying 100 taxes on the 100K, you would pay taxes on 100 minus your 50K loss. So you pay taxes on 50K instead of 100K. So that would be less taxes that you are paying because you own a short-term rental. And that is one of the advantages of having a short-term rental. Being that you have a short-term rental and a W-2. That is one advantage that people take if you are still in a W-2 and you own short-term rentals. So you can take account for any losses on your tax return and pay less taxes. So instead of the money going out to the taxes, the money is going back into your pocket because they're accounting for the losses that you received in the short-term rental industry. So these are two advantages when it comes to taxes, whether you're going to pay taxes or whether the money is going to go back into your pocket. Again, that is people who are in the opportunity zone space, tax advantages there. And then people in the short-term rental space who still have a W-2 job, tax advantages there. So keep in mind that you, when it comes to these tax advantages, that you're going to talk to your CPA and your attorney just to make sure that you are meeting all the legal requirements, that everything is legal, everything is transparent, everything is on the up and up. All right. So I just wanted to bring that in and let you know some of the advantages that you could be partaking in when you are in these certain industries. Instead of the money going out of your pocket, the money is coming into your pocket. All right. So if you like the channel, please hit the like button. If you're not a subscriber, please hit the subscribe button and notification bell next to it so that you won't miss an episode. Also, please leave a comment. It helps the channel. Thank you for watching and have a good rest of your night.